Coming up on today's show, Walmart's earnings and what the CEO said about tariffs, sentiment, and what it means for the market. Are valuations becoming a concern again? And of course, we need to talk about the trade war. Donald Trump keeps making moves and everyone has to keep up. We've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks fluctuated on Thursday as investors weighed Walmart's tariff-clouded earnings and digested retail sales and inflation data for further clues to the health of the economy. The S&P 500 closed higher for the fourth day in a row, but that was because of the broad market. Roughly speaking, technology weighed on the overall market today. For example, look at Meta, look at Google. They weighed on the comm services space. Amazon as well, down 2% along with Tesla and Walmart. Some of the bigger names simply did not perform really well today, and that extended towards Apple, Microsoft, and the entire infrastructure space as a whole. Semiconductors were kind of flat-ish. We did see some mild outperformance here in software, and then everywhere else, it was actually broadly green. I mean, if you look at the best performing sectors, guys, it was utilities, staples, real estate, healthcare, industrials, materials, financials, energy, with gold also gaining 1.61% today and the S&P 500 up 0.4% for the day. Now, you do look at this in aggregate, and yes, we did see a net gain for most sectors, excluding the discretionary space. However, when you look more closely, you look at what sectors were at top. It was defensives, utilities, staples, real estate, gold, and healthcare, right? So there is that concern still going on, that tariff concern, especially as it pertains to Walmart's earnings. And we'll talk about it a little later on. Looking at the factor and size segment, you could see large cap growth was down ever so slightly in the red, but nothing major, just flat on the day really, as well as small cap growth. We saw outperformance in sort of like the value and core components of the market, particularly here in mid cap, particularly in the large cap space. And then everything else was so and so. To be honest, today was a bullish day, not quite as bullish as it was at the start of the week, but a bullish day nonetheless, with a little bit of digestion from some of these large cap names, which is much needed because they have led the rally coming into this week and at the start of this week. Now, what really did help sentiment today, because to kick the day off, we did start, the S&P 500 did start the day down about 0.5 percentage point, and we did claw back some of those losses. And I think part of the reason why we did that is actually because we got the PPI data. It came in incredibly cool, down 0.5 percentage point on a month-over-month basis. The consensus there was for 0.2%. The core figure roughly came in the same, very cool, against the consensus of 0.3. So we were looking for, a gain on a month-over-month, and we actually got deflation here for the PPI numbers, and that is coming off the previous number that didn't see any inflation at all. Retail sales was also very robust. Now, coming off last month, which saw a 1.7% gain, the consensus was for a no gain month over month. We eked out 0.1%. So retail sales very solid, and then initial jobless claims came in as expected. So very solid data. We got cooling inflation. The consumer is still spending. The labor market continues to remain pretty robust. That is a solid day of earnings, and that's why stocks sort of did drift higher into the close. Also, what helped the tariff sentiment today was that India came out and offered a trade deal to impose no tariffs with the US. We haven't got a response from Donald Trump and his team. However, what did weigh on the market overall was Walmart, their earnings. The CFO coming out and saying price hikes from tariffs could start later this month and accelerate in Q3, Q4 of 2024, as the retailer actually posted very good earnings. Walmart beat on the top line, beat on the bottom line. The stock did fall on the back of these earnings. However, it was almost turned to positive for the day. So the market's saying, hey, I really like these earnings. And that's telling you everything you need to know, especially with the PE ratio of Walmart at 38 times. Now, there was a lot to love from these earnings. Walmart's legacy business grew 2.5%, but their e-commerce segment grew 22%. The international segment grew like a ridiculous amount. It was like 15%. So there is segments of this business growing a lot, but their legacy business, low single digit growth. I don't know if that warrants that PE right there, but the market seems to like it, and that's all that really matters. Baba also reported their earnings. Now, they reported mixed earnings. They missed on revenue, beat on EPS. The stock was down 7%. The company repurchased 5% of its stock outstanding, and I think the reason why this was the case simply because the stock had rallied like 65% into this print, and it was sort of a buy the rumor, sell the news type of situation. Still, Baba, very, very cheap. And I think we'll probably find a bottom right here and then rally back to sort of like the 130 mark later on next week or next month. I think, these were actually very, very good earnings from Baba, in my opinion. Meta was down 2.43% as the Wall Street Journal reports an AI model delay. Company engineers are struggling to significantly improve capabilities of its behemoth large language model, leading to staff questions about whether improvements over prior versions are significant enough to justify public release. The stock was down 2% on this. You don't want to get news like this from Meta, and we'll keep an eye on this story. Foot Locker was up 86% today after the company announced a definitive agreement to purchase a sneaker chain for $24 per share. That is Dick's Sporting Goods. They're going to purchase Foot Locker. This is a sizable premium to its close price yesterday, which was close to $12.87. The market loves that. This will just be pending regulatory approval, but once this goes through, Foot Locker shareholders, especially those that bought at the $12 mark, can breathe a sigh of relief. Coinbase was down 7% today after disclosing that cyber attackers had stolen sensitive customer data and threatened to publish it unless the company paid them a $20 million ransom. Coinbase said they would not comply with the ransom. They would rather reimburse customers, and they offered a $20 million reward for any information as it pertains to the hackers. So yeah, not a good look for Coinbase, but they were up 22% yesterday. So I think net on the week, shareholders are still sitting pretty. Shareholders are struggling with United Health Group, though, down 10% after the Wall Street Journal reported that United Health is under criminal investigation for possible Medicare fraud. The company denied this and said that they haven't heard anything from the FTC. However, investors would rather sell the stock. The stock is down 54% in the last month. It was $600 just 6 weeks ago. This is where we are right now. Absolutely insane price action. My fair value for the stock, by the way, guys, is $243. So if we get to that range right there, that would be a good place to enter in. And then for everything we saw today, it was 3,600 advances, 2,500 decliners. We saw net inflows in the New York Stock Exchange, but outflows in the NASDAQ 100. That really goes to show the mega cap trade. But net, the S&P 500 still gained. And market momentum continued to improve from yesterday, continued to improve from last week. And you can see right here, the 5-day, 20-day, and 50-day moving average continues to be above the 50% mark. Market momentum looking good and improving. That's exactly what you want to see. Diving into the charts as a whole, guys, the broad market was really the star performer today. Look at the RSP up just shy of 1%. Also up here in the after hours, up 0.1%, beating the NASDAQ 100, which was almost flat. The S&P 500 gained 0.4%. And you saw mid caps and small caps kind of underperformed. It really was a day for sort of the large cap indices that weren't the mega caps. They performed really, really well. You can see here that value outperformed growth. Europe gained ever so slightly. China fell on the back of Baba's earnings. Volatility did tick down. Very interesting. Guys, look at the spot VIX at the 17 level. This is a great time to sell covered calls. When we're in the teens, covered calls are the play for the market. And then looking at yields fell significantly today, down 2.5% here in the 2-year yield, the 10-year yield coming off their highs. This is something we spoke about. We said if yields did go higher, that would pose a problem, but it does look like we're sort of topping out. And as a result, TLT was up, the AGG was up, and Bitcoin was rather flat today, underperforming stocks as a whole, but look, still acting very, very resilient, especially when you compare Bitcoin to the mega caps. Some of the mega caps fell significantly, especially after the Coinbase news. So Bitcoin very resilient. Gold was up 2%. So that tariff trade concern is still on the back of the minds of investors. Now, looking at the S&P 500, you can see that we continue to be at the top end of the range right here. That probably is a sign that we will see a little bit of a pullback. And I've been saying that for 2 days now. We haven't seen that just yet. However, think it is coming. We are going to see a little bit of a pullback, a little bit of a washout. Some of these bulls that have sort of entered at the highs right here, we just want to see them, sort of clear their books, and then we can make the next leg higher. Ultimately, if we get a pullback sort of to this 5,800 area, that would be golden because it's where we gapped up, right? But it's also where we would find support at these highs right here. So if we pull back to this 5,800, go from there, we can then go ahead and target all-time highs. There is a couple of catalysts that could take us to all-time highs. Nvidia's earnings, particularly as pertains to the Nasdaq 100, if we see a little bit of a pullback sort of to the gamma flip, right, we get Nvidia's earnings. I don't think it's next week, it's the week after next, along with maybe some trade deals, positive economic data as per usual. And then with Nvidia's earnings, that can definitely take us to all-time highs, or the market can sort of like front run us to all-time highs to that level, and then we can maybe sell the news on Nvidia's earnings. That being said, guys, what I'm looking for probably tomorrow is a little bit of a risk-off event into the weekend. That would make sense, and just a little bit of a pullback here from these highs and then a reset. However, we are in very, very bullish momentum. We are in a new bull market in the Nasdaq 100 after this pullback right here. And so if we do continue to march higher, don't be surprised. You want to stay invested in an environment like this because the market can do very, very weird things. I think ultimately we probably go higher next week if we close above today's high right here in the Nasdaq 100 as well as the S&P 500 right here. If tomorrow we close the week above that high, next week, bullish week. If we close below, I think then we'll talk about what happens next in the weekend video. Now, guys, let's actually quickly look at the 10-year yield. Very, very interesting, strong, bearish engulfing candle. That probably means we will go lower. If yields go lower, that probably means stuff like the TLT will probably catch a bid. Ultimately, this does look like a triple bottom right here for the TLT. Probably a great place to enter some bonds if you want some diversification and safety in your portfolio right now. And you could probably target, I would say, the $90 area there for the TLT. You're looking at a gain of probably 4%. And I do think the TLT pays on a monthly basis. So you also be getting that like 4% yield or something like that. What's the 10-year yield? 4.5% yield, somewhere around there. The TLT is the 20-year plus treasury. So you're probably getting anywhere from 4.4 to 4.8% in a yield, which is not bad. Not bad at all, especially if yields do come down, probably that 4.4% level. We'll see. Nonetheless, it does look like based on the candle we got here on the 10-year yield, the bonds are going to rip, yields are going to come down, and that should bode well for risk assets as a whole. Now, let's actually look at gold and what's happening. Now, guys, we said yesterday that if we said there's two zones right here, this first zone is our support zone for gold, and look at this candle. Bulls came in a very big way. They were seeing the exact same thing I was seeing yesterday, and it does look like the bulls are buying. What needs to happen now is retake of this high right here. Call it the 3267 level. We go ahead and hit that. You probably target the upper levels. However, if the bulls fail at today's open, which is this level right here, that could probably take us lower. But this does look like bullish price momentum. It does look like this triple bottom break is looking to be a fake out, especially if we can go ahead and break above right there. That being said, I don't want to be a buyer of gold. I don't want to be a seller of gold. I'd rather be a buyer of Bitcoin, which is experiencing a slight pullback here, completely normal. However, if M2 money supply is anything to go by, we will expect higher price momentum. Bitcoin, this purple line right here, follows global M2 money supply lagged by 80 to 100 days. It gives us a good indication as to what Bitcoin is going to do next. You can see right here, Bitcoin is moving higher, and we are forming a little bit of a top here in M2 money supply. That being said, Bitcoin still has a while to ride before we actually top out here at the 140,000 level. All in all, Bitcoin looks solid for continued gains to the upside. Test. Now, guys, let's talk about sentiment. This is the AA sentiment survey, and what we've seen in the last couple of weeks here is an uptick in bullish sentiment as some of the tariff concern has unwinded, and we have actually seen bearish sentiment as well tick down. However, now something to note, bullish sentiment is at about the 36th level, and while just slightly above the historical average, bearish sentiment still remains elevated at about 44.4% and above the bullish sentiment right here. So despite the market rally we've seen, what we can still say is that there is underlying fear in the market. But if you want to take the other side of that, this figure right here can actually propel us higher as this sentiment needs to be unwounded as more trade deals come to front of mind. Now, one reason why we've actually seen this turn in the last couple of weeks is earnings, and I cannot stress it enough that earnings has been very good this earnings season. 14.1% earnings growth, 16% if you actually exclude energy, led by the healthcare, comm services, and technology sector. They're producing the majority of the earnings, and that's actually what you want to see. They have the largest market cap, they are priced to growth, and they are growing. Now, this is significantly better than the estimates we were expecting at the start of earnings season of 7.8%. We're also beating here on the revenue side, margins coming in line, things looking very, very good this earnings season. But where does that leave us with valuation? Right now, valuations have come off their highs, as you can see here for US stocks. We were previously trading at 23 times. Now we're trading just under 21 times earnings. So still elevated, if you ask me, elevated relative to the rest of the world and also elevated relative to history. However, according to BofA, this premium could be justified. US corporate profitability remains unusually high, supporting those high equity valuations. You can see right here that return on equity is sitting at about 20%, 21%. That is about the same as the multiple compared to other times in history when we've had a recession or no recession, right? Where return on equities were in the mid-teens, you could even say low double-digit percentages. So yes, valuations are high, but it's supported by companies that are just making a whole bunch of money. Now, what could also drive sentiment over the next couple of weeks is the macro. And guys, BofA gave us their GDP nowcast forecast, and you could see a 2025 Q2 GDP, and they're looking for 2.4%. Very, very robust growth after the quarter we've just had. A recession is defined as 2 quarters of negative GDP growth. As everything stands right now, we are not looking for negative GDP growth. However, that can change, and we will keep tabs on that, because look at Q1. We were expecting roughly the same at the start of the quarter, and that went down into negative territory. However, Goldman Sachs don't see a recession. In fact, their recession probability odds have ticked down to 35% from 45%, when the Bloomberg consensus has ticked up ever so slightly. That being said, we're still not above the 50% mark, and a recession is highly unlikely. Both the survey data and the actual data is telling us that as of right now. Looking at data tomorrow, the big numbers are going to be building permits, housing starts, and University of Michigan sentiment. And then on the earnings side, there's no earnings of note tomorrow. But if you made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.